Hey guys, Sam here with Simpler Trading, and today I want to walk you through all the steps that I do over the weekend to prepare for the week ahead. I think it's really important to prepare for the trading week over the weekend because then you're doing the work when a lot of traders are out there not doing the work, and it allows you to have a leg up, an advantage going into the next week. So in this video, I'm going to show you all the steps that I take to prepare for the week ahead, that I also take to write my This Week in the Markets report, which is a fully fleshed out breakdown of what's going to happen in that week, and I'll show you how to do that as well. And then I'll also just show you 5 things that I think every trader needs to do to prepare for the week. So be sure to stick around to the end because we're going to give you the walkthrough, and let's go ahead and dive right on in. Pre-market prep. There's 2 kinds, at least the way I like to do it. Weekly prep, daily prep. Weekly prep, I like to do Saturday, Sunday. This is what is found in my weekly This Week in the Markets report. And I like to look at everything for this prep as it gives me weekly direction, a little bias, and where to focus. So let's take a look at what that looks like. So for those of you that are unfamiliar, this is This Week in the Markets. And this is the weekly report that I make. Initially, this used to be just for myself, but then we started making it available for everybody. And whether you're, if you already are a member of this, and I basically do your work for you, which is a nice thing, I would imagine. Because I'll tell you what, if the shoe was on the other foot, and if there was somebody out there that I could trust to do the level of work that I do for you guys, for me, I would pay them and happily go live my life this weekend. Unfortunately for me, I have not met that person. So unfortunately for me, I am that person. But it's a sacrifice that I'm willing to make in the short term for the long-term gain. Even if you aren't a member of this, that's perfectly fine. I want to show you basically how I do this, and then you can maybe consider doing it the same way, or put your own spin on it. Now, before I show you the rest of this, I will assure you, just because this is going to be a lot and it's going to seem daunting, especially if you're brand new, you don't have to do it to the level that I do it, right? Keep in mind that this is going out to a couple hundred people every week on my end, so it does behoove me to cover as much as possible, but you don't have to do it in this level of depth. So we'll focus on what to cover. So I'm going to skip the story of the week because the story of the week comes at the end. I actually write the story of the week at the very end. The very first thing that we do is actually look at the charts. So I'll come back and we'll cover the story of the week, but for now, let's just cover this stuff. So the very first thing that you need to know for the weekly prep, and some of this is going to be like basic stuff, right? But it's a lot of stuff that I think a lot of folks forget, especially, myself included, if I don't have it written down. So make sure you have an idea what the calendar is. So I'm going to go ahead and drop this into the links here. Make sure you bookmark that, right? Make sure you bookmark that. I provide it here because what I typically will do is I'll print out just this page right here that you're looking at, the calendar, the historical tendencies, the sectors to focus, and the watch list. And I'll just have that next to me the whole day, right? Like it just sits next to me. This is kind of my cheat sheet. It has everything that I need. I don't have to think. I don't even have to go to Forex Factory. I know what's going on because I already printed it out. So the first thing is the calendar. Second thing I would have an understanding of is just the historical tendencies of that week. You can get that information from the Trader's Almanac. So because we should give credit where credit is due, I'll drop you the link in here, and you can consider that or not, but that's where I get the information from. After that, we have sectors to focus. Now, mind you, I have to do the chart work before I can get back to this, so I will write it down because I think that's really important. Sectors to focus. What you don't want to do is to start the week and think that the entire market is your oyster, right? Oh, I can trade anything. The entire market is my oyster. I'll trade some utilities and I'll trade some Amazon. It's like you're going to get eaten up. Like it's just like anything else. Like if you were hunting, you wouldn't say I'm hunting this or that or this or that, right? You're gonna say, hey, I'm out here, I'm hunting this, I'm waiting for this, right? If you're hunting deer and a squirrel runs by you, you're not gonna say, well, now I'm hunting squirrel, because then you're gonna miss the deer. So sectors to focus keeps you focused on where you should be, and we'll cover what I look at there. And then lastly, what I think is somewhat important is just the stock watch list. Usually based on the sectors long or short. All right. So here's what I like to do. Now again, this is going to seem like a lot of stuff because it is, but you don't have to do this much. So what I want you to do as we go along, pay attention to the things that have these little asterisks next to them, and those are the ones that you absolutely should be looking at. Everything else that doesn't have an asterisk, you can take it or leave it. You'll be better if you look at everything, but of course, you don't want to have analysis paralysis and then not be able to take action once you've done the work. The main thing that I would just reiterate is keep in mind the market doesn't pay you for having good notes. The market doesn't pay you for being prepared. The market pays you by being prepared and taking action. Taking action is important. So you'll notice here on SPY, right? Actually, let's go through this and then we'll come back and use SPY as an example, and you can kind of see how I use my indicators to tie all this together. So first up is SPY. I look at the indices, and now SPY is the only one that I think you absolutely must look at, but I look at all four. Then I look at the sectors individually. There's none specifically here that I think are overly important, but I do like to look at them all just because the positioning of the sectors, right? Like for example, if I say the XLB or something or XLC is a bear, then I can't put XLC as a long, right? So looking at the sectors just helps me focus on whether it should be in the long bucket or the short bucket. So maybe let's do this. Put all sectors into either long or short bucket. I think that's pretty simple enough. So let's go ahead and keep moving on here. So these are all the sectors. If something's neutral, just don't write it down, right? Like utilities to me this week, I looked at them as a little bit bearish, but more neutral. I don't have it as a long or a short. You don't have to have everything as a long or a short, right? Only put the strongest shorts and the strongest bulls. So one more time here, you'll notice that in terms of the longs this week, there isn't anything there. It's the dollar and it's VIX. And then these are some of the strongest shorts. Unfortunately for bulls, it's pretty much the whole market. So let's keep going. International markets you certainly don't have to look at. As a professional trader, it is something that I find to be helpful, but it's not something you absolutely must look at. So you notice none of them have any asterisks. So if you're just getting started, I would leave this at the very, very end, right? Once you've gotten really good at everything else, then you can tie in international markets, but they are not overly important if you're just starting out. In terms of Forex, yes, you must know what the dollar is doing, especially nowadays, right? Now, I have asterisks here on the euro and the yen. The Dixie captures the spirit of everything. So if you just want to look at one chart for the week that's Forex related, I would just shortcut it with the Dixie, DXY. In this alt market also, I like to look at bonds. So you'll notice that bonds here, almost every one of these has an asterisk. That's just my own personal bias because the bond market is that important. If you're just getting started, again, what I would really focus more on is the SPY, the sectors, and VIX. And then once you've gotten really, really good at just those three things, once you can say I am an expert at the SPY, sectors, and VIX, then add in all this color around the bonds, right? It helps if I do the work for most of you, I would imagine, but teaching you how to fish here, I would leave this after you've gotten really good at the top three things. But knowing what the bonds are doing is really important also, right? Because again, interest rates, especially right now, are going to be so important. And you guys have seen me either in the free videos or in the rooms. You've seen how I use HYG as well as a proxy for markets. After this is commodities. You don't need to do commodities, frankly, unless you're going to be trading them directly or you're going to be trading like energy stocks. You don't necessarily need to do commodities, but I just go ahead and do. If you do decide to do commodities, really the only one that I think you should really worry about is oil and copper. And I would only do those two. And then again, once you get really good, you can add on the rest, but you don't need to. And then lastly, internals. So market internals, I count that as volatility, which you absolutely must do. Volatility, VIX, whatever you want to look at. And then on some degree, the internals. So I'll give you the ticker that I like to use for internals. SPX A50R. So absolutely must have SPY, Dixie, VIX, Bull Bear sectors, and idea of the internals. Frankly, if you just focus on these 5 things, you would immediately improve yourself as a trader tremendously. It would be the easiest, fastest, most effective way of improving your trading if you had a very good idea as to where all 5 of those things were at any given time. Now, the cool thing is, because I'm just going to assume, I'm just going to speak to someone if they were just getting started. Because you're just getting started with this, because it's only 5 things, should take you no more than 15 minutes. 15 minutes, at most 30 minutes. And that's if you're really being really, really meticulous, right? And I'll show you the process that I follow, at least, and you can adjust it for your process. But the main thing that I want you to take away from this is, yes, it looks like a lot of work on my end, because it is, because I'm doing a full, complete, thorough job. But if you just focus, and it takes me about 3 to 4 hours, right? So it's not that fun. But I don't want it to be daunting for you, because here's the thing. You might want to do it 1 week. Let's say that I tasked you with doing what I do, which is the 3-4 hours worth of work. For the vast majority of new folks, it would take them like 6-7 hours, number one. But then number two, they'd do it 1 week and then they'd never want to do it again, right? Because it'd be too much. So start with these 5 things. Trust me, it's not going to take you a long time. And also trust me, it's going to make you way, way, way better. So let's kind of cover the process here to how we quantify things using the indicators. So we'll focus just on SPY because the same thing applies. Right, so SPY here, using SPY as a proxy for all the indices, as they all look the same, right? So I don't need to look at the Qs or the DIA or the IWM; they all look the same. So I just use SPY as a shortcut for all of it. So let's compare these signals with the charts. So one thing you'll note that I like to do is weekly, daily, hourly, right? Now at the end of the day, the most important time frame is really what time frame are you trading. One thing that I like to do, because keep in mind this is the pre-week prep work, meaning that this is the work that I do on the weekends. So then I'm really going to focus pretty much on the weekly and the daily, with the hourly just being kind of the steering wheel for the situation. So let's see what we said about the SPY chart here. Okay, so active weekly, 3-day, 2-day, and daily high-low sell signals, all active. And the trend loss is bearish on all time frames. So let me just go one step further here, because I do this over the weekend. I also have a long-term grid that I look at. I have 3 monitors, and on the middle monitors, just the daily and the weekly, and then on the monitor that you're looking at will be these time frames. Now again, this is once a week type of work, but it will really help you flesh out the markets. So here's quarterly, monthly, 3-day, 2-day. And I just like to glance at them. Right? This isn't going to be heavy chart work or anything. I just want to see what the momentum looks like on these time frames, because they're important. And oftentimes they're hidden because not everybody's looking at them. So the first thing I'm looking at is what is the high-low and the trend oscillator, my 2 indicators, right? So here it says that we have active high-low sells on the weekly, 3-day, 2-day, and daily, and the trend oscillator is bearish on all time frames. So let's just see how we got that. So this is the 3-day chart. You see how you have active, and you've had active sell signals. Same thing here. See how this is bearish? This is bearish. This is bearish. And this is bearish. Okay, so then we go to the daily chart and we try to see what it says there. And the weekly chart is on the left. The daily chart is here. The weekly chart, downtrend, bear, right? Red is on top of green. Green is below the middle. Active sell signals. Daily, bear, active sell signals, right? So seems simple, right? Because it should be, right? We're not necessarily doing brain surgery here. We're just saying what is the indicator telling us to do. So now that we've kind of at least confirmed what we wrote here, and that the trend oscillator is bearish on all time frames. That's really important, all time frames. You also have slingshot squeezes on a 3-day plus the weekly. So what is a slingshot squeeze? Slingshot squeeze is when something goes up and then it comes down. So basically, when the histogram goes up, peaks, and then does this. It's not as dangerous when it looks like this, but it is very dangerous when it looks like this. Now you can barely see it, so I'm going to try to expand it a little bit. So you see how the weekly squeeze here? Call these slingshot squeezes. I think Danielle came up with that. But you see how the squeeze histogram went up, red dots, and then immediately goes the other way? So the way to think of this is like whiplash, right? You're going really fast in one direction, it's going to break higher, and then it whiplashes against the grain. Those are really dangerous. So notice, and just the takeaway for yourself, right? If you have the indicators or if you don't, try to understand what the squeeze looks like, and then try to understand what your momentum indicators, whether you use mine or whether you use anyone else's or your own, understand what those are telling you. And then just have a general idea, right? And that's basically what we're putting down here. So now that we've confirmed this and this in terms of the charts, then we can kind of give ourselves a little bit more of a story in terms of what to do. So very sold intraday, right? I do have to admit that this is wildly oversold now, but all signs point to all bounces being shortable. So what does this tell me? Well, immediately after writing that sentence, you can see that I don't want to play long bounces. I don't care if it bounces. I actually, at this point, now that I've covered, well, actually, maybe after Friday, I would actually prefer it goes higher before it goes lower, right? Because I want to add more shorts. The weekly chart remains the anchor, and that implies a minimum test of 35.90 to 35.80. So notice that I'm also identifying the anchor, right? What is the cleanest chart, the longest time frame with the cleanest setup? And in this case, the weekly chart is very, very clean. You have a downsloping moving averages, bad look and squeeze, bad trend os, nothing but sell signals, right? So we can use that as the anchor. So then we ask ourselves, well, where's the next support level? And the next support level that I see on the weekly chart here is basically this red line, which is the weekly 200, which comes in just a shade under 360. So hopefully that helps. I'm just going to focus on one of those. But the main thing is just trying to understand what the chart is telling you, right? Which is why we articulate it that way. And then what you're going to do, right? It's not just, don't just write, oh, it's in a squeeze. What am I going to do? So hopefully that is somewhat helpful. Now, once you've done all that, then you can kind of come back up here, fill in your sectors to focus, right? I looked at everything. If it sucks really bad, then I put it as a short. If it sucks, but it's not terrible, then I don't put it anywhere, right? Like things that are neutral or wishy-washy, they don't deserve a focus, right? So just don't put them anywhere. Like XLU is not anywhere on this list, not long, not a short. Leave the longs with just the cleanest possible longs you can find. And then, of course, your stock watch list that you can curate however you wish. Personally, I like the story of the week. This is my favorite part of the entire report. Because you're going to be doing this on your own, you don't necessarily need to have the story of the week, but I would suggest having a plan of action. So maybe on your end, you won't call yours the story of the week, but you will call yours a plan of action. So plan of action meaning like something like this, right? Like VIX 27 is the yearly VWAP. VIX 95 is a major resistance level. If both the VIX gets above 27 on consecutive daily closes, which we are, and VVIX gets above 95, also on daily consecutive closes, which we are, that increases the probability of a crash considerably, right? So from there, then I know what I want to do, right? If this and this, then I want to be positioned for a crash, meaning out of the money debit spreads, out of the money puts, things like that. So if you guys have any questions, let me know. Even if you're not going to do everything else that I just showed you because you just, you have a busy life or whatever, you'll still be miles ahead if you just do these 5 things. And then guess what? You'll start to get so much better that it's going to encourage you to do the rest, right? Because that's what happened with me. I just used to do these 5 things and I started getting really good at it. And then I started noticing it in my P&L, and I started noticing it in my confidence. Like I was just a lot more confident taking trades, and so it made me want to branch out. It's a lot like going to the gym, right? You go and you start to see a little bit of results, and you're like, man, that felt pretty good. I want to go back. But SPX 50AR or A50R, it is one of the important ones. It is one of the ones that I would certainly start with, top 5. And here's what it is. It's a number. It's a measurement of the number of stocks in the S&P 500 above their 50-day moving average. So just to show you how crazy things are, the way to read this right now with a reading of 0.03, this tells you that only 3% of the S&P 500 is above its 50-day moving average. So there's 500 companies. There's 15 out of 500 companies above their 50-day moving average. Do you know how bad that is? That's almost as bad as it could be. What's crazy about this market is up here, it was 90%, just like a month ago. From 90% down to 3%. Historically, this doesn't happen. Historically, once you do this and you go all the way back up to 90%, you actually go into a new bull market. So I like to look at this because it tells me one thing, right? With a reading of 0.03, it tells me that everything is either red or green, right? It tells me there's no rotation. And frankly, I think we actually spoke about that, so I'll just read it. I'll just read you what I wrote here. Only 5% of the S&P 500 stocks are trading above their 50-day SMA. Now it's only 3%. That implies a high risk of a crash, as there is no rotation under the surface of the market, and the entire market will go green or red. So the way that you read this is when you have more of kind of a middling reading, like let's say that you're kind of between, let's say 30 to, 70 in this box. Then you can have rotation, right? If you're in here, then you can have, you can have tech sell off, but then energy and materials and utilities will pick up the pace. Or you can have energy sell off and tech and communications will pick up the pace, right? There'll be rotation in the market. Money leaves this sector, but it goes to another sector. When you have an extreme reading like up here or down here, I would say anywhere above like let's call it 80 or below 20, right? So probably the benchmarks I would use is 0.8 and 0.2. When it's below 0.2, it basically tells you that everything's just moving as one thing. So there's no rotation whatsoever in a bearish way. And above 0.8, it tells you that there's really not a lot of rotation in a bullish way. So the most bearish readings are actually going to be down here, and the most bullish readings are actually going to be up here. So just something really quick to note and that will help you. And in the middle is where you have more rotation and a little bit more directional, lack of direction and more chop. So I don't think we're going to have the chance to do the pre-market prep, which is what I like to do every morning. So we'll put that on the calendar and we'll schedule that for later. We'll go ahead and wrap it up there. And if you're interested in the notes, just you can look them up this week in the markets, and you can get a trial for $7. So it's actually probably a good way to get started is to just at least try a trial of that, $7. And then once you see my work, you'll be able to kind of emulate it on your own. And if you have the time and you want to do the fishing for yourself, just cancel the trial and try it out on your own. But it is something that I think will certainly make you guys a lot better in terms of the traders. I hope this helps with your trading and your prep work for the week. It's so important to do the prep work before the week starts. So I'm happy to see you guys taking the steps to become better traders by doing the work that's necessary over the weekend. If you have any questions or comments, go ahead and leave them down in the chat box below. And also be sure to check the description box for any links that we may provide so that you can have more information on how to prep for the upcoming week. Next video, we'll be doing a how to prep before the beginning of the day starts for the trading week. So that'll tie these two ideas together, how to prep during the weekend for the week ahead, and how to prep at the beginning of the market for the day ahead. We hope to see you there. Have a great day. Cheers.